Hello everyone, this is Dr. Ramandeep Kaur, Faculty Department of Commerce of Bhopal School of Social Sciences, and I am going to discuss with you a very important topic of financial accounting, that is branch accounting. Today we are going to understand the numerical aspects related with branch accounting. Now, as we all know that branch is basically the subordinate division of a head office. The head office may be there in a particular city and the branches may be spread across a particular country. So, it's basically a subordinate division of the head office, and the accounts related to the head office and its branches are known as branch accounts. Now, in branch accounts, basically the transactions related to the branches are maintained in the books of the branch office as well as the head office, so that the profit and loss of each branch can be known by the head office for a particular financial period. So, the head office maintains the branch account for every single branch that the head office is having. Like you may have the branch account for Gwalior branch, you may have the branch account for Bhopal branch, you may have the branch account for Indore branch. So, when there is a need to calculate the profit and loss of each branch separately, basically the head office prepares the branch accounts. When the head office is maintaining the branch accounts, usually there are 4 methods that are being followed by the head office. First is your debtors method, second is your stock and debtors method, third method that is being followed by the head office is final accounts method, and the fourth method is wholesale branch method. So, in this video we are basically going to discuss the debtors method. Now, debtors method. This method is adopted basically when the size of the branch is very small, and under this method the head office maintains a separate branch account for each individual branch, like as we have discussed, separate branch accounts for Bhopal branch is maintained, separate branch account for Indore account is maintained accordingly. Now, this particular branch account is of nominal nature. Nominal nature means basically in branch accounts we record all the items related with expenses and incomes. All the expenses are recorded at the debit side of the branch account and all the incomes are recorded at the credit side. Basically, this recording helps to ascertain the net profit or net loss that is generated by it. Basically, this arrangement helps to understand the net profit or net loss generated by every individual branch. And then the basic objective is to calculate the profit and loss made by each branch, so that the loss making units can be revived and the profit making units can further be enhanced. Now, under debtors method, when the head office is preparing the branch accounts for the dependent branches, the dependent branches can be classified into the following categories. First of all, you are having dependent branches with cash sale only. Second category is dependent branches with cash and credit sales, and third you are having dependent branches with nominal price sale. Now, we know that basically the branches do not manufacture the goods that are being sold by the branches to the consumers. The goods are being manufactured by the head office, and the head office supplies the goods to the branches, and the branches further sells the goods to the customers, and in return whatever sales proceeds is generated, it is transferred by the branch office to the head office. So, the dependent branches that are getting the goods from the head office can be classified into these following categories. The first category, dependent branches with cash sale only. These branches get the goods from the head office on cost price, that is no profit is included, they are getting the goods on cost price and then further makes the sales on cash basis. This is the first category. Second category is dependent branches with cash and credit sales. In this particular branch receives the goods from the head office again on cost basis, but it makes both cash as well as credit sales. Remember, there is a difference between cash and credit sales. Cash sale means you are selling the goods and immediately you are getting the cash or the money. Credit sales in the credit sales some time lag is involved, like you are selling the goods today and after certain period of time you are going to get the cash for the sales proceeds. And the third is dependent branches with nominal price sales. These branches get goods from the head office on sales price or invoice price and further sells them to the customers on cash as well as credit basis. Now today we are going to understand under debtors method the first category, that is when the dependent branches are making cash sale only. How to make the branch account in the books of the head office in the first category, that is on the basis of cash sale only. So here is an example to understand the things when the branch is receiving the goods from the head office at cost price and making cash sale only, how the branch accounts are prepared in the books of the head office. So the following example is there in front of us, and in this you are supposed to prepare Mumbai branch account in the books of the head office for the period ending 31st March 2021, and the following information is given, like you are having opening balances of assets are given, then closing balances of assets are given, then you will find the opening balances of liabilities are given, closing balances of liabilities are given, and other information is given. Now based upon this information, let us make the branch account. Now this is the format of the branch account. As we all know that branch account is a nominal account, that is we record all the expenses and incomes. Expenses are recorded at the debit side and incomes are recorded at the credit side. So the format of the branch account is having 4 columns: particulars, amount and particulars, amount, one at the debit side and another at the credit side. Now as per the format, branch account starts with the opening balances of assets. Now let us understand what all assets are given to us and what are their opening balances. Now in this question you will find that for opening stock the balance is given 3,56,000. Then opening balances for debtors are given, that is 28,000. Then opening balance for petty cash is given, that is 500 rupees, and opening balance for furniture is given, that is 12,000 rupees. So all these are your assets that are given as per the information given in the question. So we will write down the opening balances of all the assets, that is stock, debtors, petty cash and furniture at the debit side. Remember, assets opening balance is always a debit balance, so it will come at the debit side of the branch account. Now at the credit side of the branch account will start with the opening balances of liabilities that are given in the question. Now here you will find that only one liability is given, that is creditors. So this we will write down at the credit side of the branch account, that is creditors. By creditors 12,000 rupees. Now when the opening balances of liabilities are coming at the credit side, definitely the closing balance will come at the reverse side, at the opposite side. So opposite side means you will find the closing balances of creditors at the debit side. I am repeating, opening balances of creditors will come at the credit side and closing balance will come at the debit side. So for the closing balance of creditors, rupees 12,000 is given. So 12,000 we will write down at the debit side of the branch account. Now since we have recorded the opening balances of all the assets at the debit side, so closing balances of the assets will come at the credit side. So what all assets we are having? First of all we are having stock. So stock's closing balances is given as 3,76,800. Then the closing balance of debtors is given 1,92,000. Then closing balance of petty cash is given, that is 240 rupees. And here you will find that the closing balance of furniture is not given, that we are supposed to calculate. We are having the opening balance of furniture, that is 12,000 rupees, and some additional information is given that depreciation is to be charged on furniture at the rate 10% per annum. Since we have used the furniture in our business for the entire year, therefore depreciation will be charged on the fixed asset, that is furniture. So cost price or opening balance is 12,000 and you have to depreciate furniture by 10%, that is 12,000's 10% is 1,200 rupees. So the closing balance or the written down value will be 12,000 minus 1,200, that is 10,800 rupees. So you have calculated the closing balance of the furniture. For rest all the assets, the closing balance was given to us and that particular balance we have written as it is. Now next up after the opening and closing balances of assets, and after opening and closing balances of liabilities, let us record other items that are given to us in the question. Now, next item that is given to us is goods sent to branch by the head office, and the value of those goods is 1,04,400 rupees. Now, we all know that goods are being sent by the head office to the branch office, and further the branch sells the goods to the customers. Similarly, cash is also being sent by the head office to the branches, and with the help of that particular cash, the branch actually meets all its expenses. So, when the goods are being sent by the head office to the branch, it is recorded at the debit side. Similarly, any kind of cash that is being sent by the head office to the branch, that is also recorded at the debit side. And opposite to it, when the goods are being returned by the branch to the head office, that is recorded at the credit side, and any kind of cash remittance that is being paid by the branch office to the head office, that is recorded at the credit side. So, here first of all, goods sent to branch, that is, who is sending the goods to the branch? Obviously, the head office is sending the goods to the branch. So, goods sent to branch amount is 1,04,400. This is recorded at the debit side of the branch account, since our entry is Mumbai branch account debit to goods sent to branch account. So, it is recorded at the debit side. Then there are certain goods that are being returned by the branch to the head office, and the value of these goods are 17,200 rupees. So, when the branch receives the goods, entry is coming at the debit side, and when the branch returns the goods back to the head office, entry will come at the credit side, since the entry is goods sent to branch account debit to Mumbai branch account. So, entry is coming at the credit side. Next, you are having checks sent to branch for expenses. Now, who is sending these checks to the branches so that the branch can meet all its expenses? The head office, and the value of this check is 19,740 rupees. So, when the check is being received by the branch office, entry will come at the debit side, that is Mumbai branch account debit to bank account, and the amount is 99,740 rupees. Now, when the goods are being received by the when the goods are being sent by the head office and the branch receives the goods are being sold by the branches to the customers. When the goods are being sent by the head office to the branch office, and when the goods are being sold off by the branch to the customers, some sales proceeds are being received. So, those sales proceeds are being sent by the branch office to the head office. Now, let us understand how much cash proceeds are being sent by the branch office to the head office. So, as per the information that is given to us in the question, the cash sales are 64,000 rupees. So, 64,000 rupees are being received when the branch has made the cash sales to the customers. So, this 64,000 rupees will be sent by the branch to the head office, and entry will come at the credit side. So, at the credit side, remember, we have recorded the opening balances of liabilities, the cash sent by the branch to the head office, that is also recorded at the credit side, the goods returned by the branch to the head office, that is also recorded at the credit side, and also the closing balances of all the assets are recorded at the credit side. Whereas, at the debit side, you will find the opening balances of all the assets, then goods sent by the head office to the branch, you will record at the debit side, then the cash that is being sent by the head office to the branch, that is also recorded at the debit side, and of course, the closing balances of all the liabilities will come at the debit side. Then you make a total for the debit as well as credit side. We know that if the credit side is greater than the debit side, then obviously there is a net profit, and this net profit is transferred to general profit and loss account. And if suppose the debit side is greater than the credit side, the difference is your net loss, that is again transferred to your general P&L account. So, this is the first question under debtors method, wherein we have understood how to prepare the branch account when the dependent branch is getting the goods from the head office on cost price basis and making cash sale only. Now, sometimes the cash that is being sent by the branch office to the head office, the remittance, is not given in the question or the information is not clear. So, how to calculate the amount of remittance in that particular case? Let us understand this by another example. Now, again some information is given, like the opening balance of assets is given, goods supplied by the head office to the branch is given, expenses paid by the branch is given, cash sale is given, and closing balances of all the assets are given. Now, again let us prepare the branch account and understand how to calculate the profit and loss in that particular situation. Now, opening balance of stock is given, that is 8,000 rupees. We will write down this figure as it is. Then goods supplied to branch is given, goods are being supplied by the head office to the branch, 80,000 rupees, that is given, that will come at the debit side. Some cash is being sent by the head office to the branch office so that the branch can meet its needs of wages, salaries and other expenses. So, we are writing down those figures as it is. Then closing balances of closing stock and petty cash is given, that again we have written the closing balances as it is. Now, the new thing in this particular question is that the sum of the expenses are met by the branch. Now, how the expenses will be met by the branch office? Like you can see that in this particular question, cash sale of 1,10,000 rupees is given. So, out of this cash generated, certain expenses are being paid by the branch itself, like petty cash 300 rupees, carriage 500 rupees. So, these expenses are met by the branch itself from the cash that is generated through the cash sale. And even before sending some money to the head office, the branch is keeping some money as petty cash, 500 rupees petty cash in there with themselves, so that they can meet their further expenses. So, all these expenses, that is expenses of 500, 300 and 500 rupees will be deducted from the amount of the cash sale, and total amount of money that will be remitted to the head office will be 1,08,700 rupees. So, again after writing down all the entries, again you will make a total, and like in this question the credit side is greater than the debit side. So, definitely the balancing figure is your profit, net profit, and this will be transferred to your general profit and loss account. So, with the help of these examples, we have understood under debtors method how to prepare the branch account when the branch is selling the goods on cash basis only. Thank you so much. In the next video, we will come again with another important topic of financial accounting. Till then, thank you.